Thank you so much for joining us today. Thank you to Cambridge House for putting on this event year after year. You always do such an amazing job. It's so wonderful in Vancouver to bring this many people in the mining space together, considering this really is the platform for junior exploration, I think, on a global scale. So thank you again to Cambridge House. Today you're joining us for the topic of List Local, Trade Global, the public company opportunity in challenging markets. I'm assuming this is not news to any of you. I'm joined today by some wonderful guests. I'm joined by James Black, VP of Listings Development with the Canadian Securities Exchange, my boss, and Jason Peltrowitz, who is Executive Vice President of Corporate Developments with the OTC Markets. Thank you both for joining me.
Thank you for having us.
All right, let's just start off and get caught up with what's going on with both of the platforms. James, tell us about the CSE and what's going on right now.
Yeah, so we titled this presentation using under the guise of challenging markets. Those who are in the junior capital space know that it's been a bit of a slog for the last few years. Coming out of COVID and a high inflation environment, we're now sort of making up time for all that good time with some tough times. And so what we're observing at the CSE coming off 2024 was still quite a bit of activity, 45 new listings. Relative to peers on a per capita basis, pretty good, actually probably above the competition. But again, financings, which are the true measure, or one of the true measures of how healthy a market is, were quite good. It was a healthy transactional year, over 1,100 financing transactions on the CSE. To put that in context, most years 800, 900. So we're seeing deals getting done on the exchange, but at a much smaller scale. And then at the end of 2024, saw trading in the secondary market pick up appreciably. So to that end, we're seeing signs of life in the market. We like to feel that the transactions, both on the secondary market and on the primary financing side, are a telltale sign that we're going to see more listings in the coming year. But yeah, that's something we have to wait to see a bit on. You?
Yeah, last year was an interesting year for us. For those of you that haven't heard of OTC markets, we're actually the largest stock market in the US for non-US equities. So 92% of the dollar volume that crosses OTC markets is in companies that have their primary listing elsewhere. We have over 1,000 Canadian companies that use our market as their entry point into the US. And we're also the US market for companies like Roche, Adidas, Heineken, Marks & Spencer, some of the largest global brands. So what last year and the year before that post-COVID saw is a couple things. A, markets around the world are challenged as their companies are looking at the US and thinking they need to be in the US as a primary market. And so we work with stock exchanges like the CSE and the London Stock Exchange and Deutsche Börse and stock exchanges around the world that want to keep their home market listings there. And they use us as the ability and the access point into the US capital markets. Why the US? Well, one, valuations in the US, as everybody knows, are significantly frothier than in other markets. And so if you can capture that US retail and institutional flow, you can bridge that gap. We're also a liquidity creator. So as US investors are buying the securities, whether it's Canadian listed companies or UK or Swiss, that liquidity is flowing back into the local market. So you're creating liquidity, you're bridging the gap, and you're expanding your shareholder base. So last year we saw significant growth in companies from around the world looking to take advantage of that. And we continue to grow our Canadian franchise, again, over 1,000 companies on QX and QB, our primary markets, with significant growth coming out of the CSE as well.
Amazing. I think one fact that is very relevant of why this relationship is so important is that I believe the number is approximately 63% of the global equity or equity capital is in the United States. So if you're listing in Canada or other countries in the world, accessing the United States for pools of capital is imperative.
Yeah. And people always say, well, why don't I just go to the New York Stock Exchange or NASDAQ? And I think that list local, trade global is our tagline there. What people fail to recognize is, or maybe they do, if you go list on the New York Stock Exchange or NASDAQ, you're becoming an SEC reporting company. Sarbanes-Oxley compliant, you have to reconcile to US GAAP. There is a significant cost that goes with that. And if you're a Canadian issuer that dual lists on those markets, that's a liquidity suck. the US becomes the primary market and the Canadian market loses that liquidity. We are fortunate at OTC Markets, we have a very unique regulatory monopoly, which is something called the Foreign Private Issuer Exemption, SEC Rule 12G32B, very sexy name. And so that if you're a company listed on a qualified foreign exchange in good standing and you make that disclosure available in the US through us, you are exempt from all of that. So it becomes significantly less costly to be public. You're accessing all the same investors through the same networks, through the same connections into every US broker-dealer. But you get to remain a national champion, right? You can list local. You can be a CSE issuer, proud Canadian issuer, and have all the advantages of the US without that cost and complexity and risk of being an SEC reporting company.
Thank you, Jason. On that note, one question that I think a lot of people are asking themselves is, in these times, do we stay private and try and raise private equity and further a project, or do we access the capital markets? And what's the risk involved in both? Jay?
Yeah, I mean, this is anecdotal. I think, obviously, we're going to be biased in this response, but private markets right now, probably better valuations. I mean, traditionally, the public market offers a bit of a valuation premium. I think that's typically why people go public. There's more deal tension, there's more buyer tension. But in the junior capital markets, specifically in the mining sector, good luck going out there as a early stage operator and finding enough private capital to carry your project through till feasibility or a later stage where you become a legitimate takeout target. There just aren't that many matches out there. So the public markets offer the mining sector really an unmatched opportunity to meet capital as an issuer in a well-regulated environment, a trusted environment. Jay talked about disclosure. That disclosure that we offer at the CSE is, it's informed by the regulators that supervise our exchange. It's much the same as it is on the TSX or the Venture or the CBOE. So there's standardization as well to deliver regular financial information and comply with securities rules. You don't get that in the private market. So I think in early stage, high risk businesses, it's integral that we continue to support and have a healthy public market. And the way we do that at the CSE is just trying to make it as simple as possible. Simple rules, effective application of the rules with good staffing, and then obviously low fees. And then with the relationship with OTC Markets, when you're ready, having an availability to go to the US, leveraging your current disclosure model, and going to that deeper pool of capital, and perhaps leveraging something like Reg A Plus for a larger financing south of the border. So it's always tempting to say that there's a private market always there waiting for you, but it's in this environment, and I think as time goes on in 2025, we're going to see a more return to public capital. And again, last year we had $2 billion raised on the exchange, so it wasn't like it all went away.
Yeah, I don't know that I have much more to add there. Private seems really sexy. I always look at WeWork. They were a private company that was going to go public, and that's the best example of what happens when you open the books and you have to make disclosure. And everybody opened the WeWork books. It was like, oh my God. Certainly not every company is like that, but there's something to be said. And I look at our partnership as kind of like public venture capital. We used to use that word a lot. I think we still do.
That's a good one, yeah.
There's something to be said for disclosure. There's something to be said for investors pricing what they think the risk of your market is and the valuations that come with that for raising capital. That hasn't gone away. Markets kind of go up and down.
Yeah.
But I certainly, I've been doing public markets my whole life, so maybe I'm biased, but I still think it's the best way.
I think the one thing we got to fight for in Canada is on the tech side, so forget mining for a second, but trying to keep quality tech deals in the public markets or even using or considering the public markets. Once they go public, they lose their shred credits, they lose some of the advantages of being private. And then often you're getting looked at by US interests that want to take you private longer through Series A, B, C, D, or whatever, and then list you eventually on the NASDAQ or the NYSE. But as we observe with a lot of these companies, whether they've been public first year or go private and then go public on the NASDAQ or NYSE, WeWork a good example. You got to have the right DNA and the right infrastructure internally to make that deal work, and most of the time they fail. And that's why that iterative process of being public venture capital is an iterative process. You come to market, you don't over dilute, you don't give up too much ownership too soon to controlling interests, and you become over time more controlled over by those who come in at further maturity, like stages of maturity, right? So you're not giving it all up too soon. And that's an important part of the Canadian model, which I think is almost irreplicable on any other marketplace or environment internationally, which is why people come over here to do these types of deals. And that's why we have such a thriving mining market. There's no real, like for example, in the US, you couldn't really launch a junior on a US national exchange. It would just be cost prohibitive. There'd be too much liability on the shoulders of the management and the board. So.
Yeah, and I think further to that, James, I don't know the stats on this, but how many issuers on the CSC have projects outside of Canadian borders? So we definitely have become the place where people can access the markets and in turn enter the US via the OTC. Jason, the OTC recently coined the term list local, trade global, and maybe you can touch on that a little bit. I think all three of us are quite often on planes and going to other countries, and what I'm seeing more and more as globalization continues to erode is that we're seeing that within the marketplaces, and I'm not sure if you agree with that, Jason, but they are seeing Canada as a place to go and get their capital markets feet wet and access American or the US capital pools of capital, excuse me. But it seems to be something that I'm seeing more and more in other countries. Are you seeing that?
Yeah, a little. So our list local, trade global tagline kind of is two things behind that. The first is that public companies should be national champions in the countries in which they operate. I think we firmly believe that. If you're a Canadian company, you should be a proud Canadian company and you should list in Canada. And I will say that, and I am on a plane a lot. I say that in London, I say that in Germany, I say that in Switzerland, I say that in Singapore. You should not be a company that's based with employees and a pedigree and a market and then think, oh, I'll just list on the New York Stock Exchange because that's where everything is. I think you should be part of your capital markets ecosystem to help it grow and flourish and make it better. Now, you still want access to US investors, the US pools of capital. And so that's what we do, right? We're a secondary market that gives you the best of both worlds. Further to that, and the second part of this is last year and into this year, we've actually launched overnight trading on our markets. And so it's not just about being a Canadian company that's accessing US investors through OTC markets. It's now you're a Canadian company accessing US investors as well as the entire Asian capital market that is now connecting in to be able to trade Canadian securities overnight, their market open in US dollars. And so you can have all the cost savings and benefit of being listed here in Canada on the Canadian Securities Exchange and very easily and efficiently access all of those pools. And so it's a unique offering, it's an interesting offering. It's probably why we're now the largest stock market in the US for non-US equities, and it continues to grow.
I think it's really exciting, and having spent some time in Australia, is they want access to North American securities, but they don't want to get up at 3 a.m. To do so. It's huge. We might not feel it necessarily right here on the ground, but it definitely will make its waves, I think, globally.
Yeah, and it's the opposite of why we started this business in 2008, because American investors didn't want to have to get up in the middle of the night to trade Australian securities. And so for, our third largest market is Australia, after Canada and the UK. The ability for Australian mining companies to be able to trade in the US in US dollars during US market hours for US investors is really important.
Yeah. Thanks for that, Jason. James, why don't we just kind of drill down a little bit? Drill down, did you get that? It just came out. Drill down a little bit into what opportunities exchanges like the Canadian Securities Exchange and platforms like OTC can do for mineral exploration companies as they're trying to access capital in these markets.
Well, you mentioned globalization and sort of the softening of borders and a flatter globe and all this stuff. I mean, technology is making that happen for us, right? But what I do understand about our business after being in this for 15 years is you actually still have to get on planes, shake hands, meet people, and facilitate relationships to make the money flow. And I think that's one of the big opportunities is that we've talked about all this stuff that we're doing that makes it accessible, but we still got to go out there and we got to create the neural network and the social networks to connect people and capital back into our market. And that goes out, one thing that we emphasize strongly at the CSE, instead of trying to launch new exchanges elsewhere, is create more relationships like we have with OTC. Make sure that when we have an issuer go over to the UK or Australia or somewhere even more far abroad, is that the people know who we are and understand our value proposition, understand that there's no shortcuts on the CSE, but we've created a more efficient environment for companies to go public. And it's all within this trusted, Canadian/North American umbrella of securities regulation. And that to me is my number one job, is trying to make our business more global. And back to the topic at hand. So it just comes down to relationships and trying to get some of the technology that interfaces into our market to make trading more simpler. The number one challenge any new marketplace has, and we've been through it through the 20 years that we've been in existence, is trying to get data of our securities in the hands of the right people and the ability to trade the securities. And as you come along and see different market cycles and different flows of capital, and right now different pools of capital around the world, because it's not really in Canada right now, you got to make sure that can interact with this market seamlessly. And that's one of our big challenges, but it's also why we have such a strong relationship with the OTC markets to help us with that.
Jason, maybe you could just add to that. I think one thing that we're seeing Canadian issuers struggle with is what do they do once they get their OTC ticker? What is next? What should they be doing when they cross the border to be able to access that capital?
Well, I will say what the Canadian mining industry is really good at is marketing and sales. And I don't want to say promotion because that's a bad word, and we don't like that on the OTC markets. But you're doing it. What's interesting about the U.S., certainly in the mining and resources space, is the breadth and depth of the investor base. And in the juniors, it tends to be more retail-oriented than the large institutions. And so I have seen small juniors say, I'm going to come to the U.S. and we're going to target the large institutions. Their companies are too small for that. You're not going to get the eyes of that. It's really, how do you cultivate that retail network? And most of our clients that are here, and we have over 100 clients here, they're actually really good at that, right? It's what are the conferences in the U.S., what are they doing? We have a virtual investor conference doing. What are you doing to turn on the screen, to light up the screens where U.S. investors are finding and doing their research? And I think companies have become really good at that. We offer a bunch of things. You guys offer a bunch of things. But it's got to be repetitive. You can't show up at a conference once and then leave. You have to be ongoing in your disclosure. You have to be on time in your disclosure. You have to tell the good news with the bad news. You have to be open. You have to be transparent. And you have to continue to do that regularly and build trust.
Okay, just to end off, for both of you, could you maybe just give us some thoughts on what you think is going to happen in 2025? What's your crystal ball tell you?
Well, Jason, as the American, I would like to wish you happy Inauguration Day. I don't know what executive orders are sitting on President Trump, non-elect President Trump, as of right now. I wish I had something really exciting to tell everyone, but I was just going to end on her point, which was, this is a really fascinating industry because you can actually go and, like I said, I've been doing this for a while. You can meet all these CEOs, you can have a face-to-face conversation with them. Whatever we do as an industry, I want to maintain that for as long as I'm around, because that is what's so exciting about the mineral exploration business, about Vancouver, about what we do as a stock exchange, is maintaining the direct contact from investor to CEO, and then you guys can do your primary research. And I just think that's something you can't do with an ETF. You can't do that with a FANG stock, okay? And let's not lose sight of the fact that you can actually do this primary research today here at the show, and that's a unique aspect of what we do here in Canada and what we do on the CSE and obviously OTC with these companies. So. We're going to be at a lot of conferences this year. We're going to be talking to a lot of people, much like I'm sure you are if you do your research on your investments. And to kick it old school. I think that's my message for 2025 is just
keep doing the work.
All the new tools and AI, technology and politics, put that all aside for a minute and just remember you have the power to go and connect directly. And we really are in a new era of doing things from so many aspects, but I don't know. For me, it's all about just connecting one-to-one. That's
good advice.
My theme for 2025.
Jason, please end off.
Yeah, well, I'll leave the politics out of it. What I do know is this. The U.S. market, I said it before, is overvalued. And a lot of that is driven by the top end, right? The stuff on the bottom, the long tail of the SME world has not seen the benefit of that. But U.S. investors understand that return in 2025 and into 2026 is really, and part of the reason why we've grown so much last year, is looking at the opportunities outside the U.S. And there is that valuation gap. And so if you look at Canada and the UK and other parts of the world, there's real opportunity for alpha, right? To make real return on investment. And we're seeing that. We're seeing that in the dollar volumes that are running through our market every day. And I see it when I go out and talk to people all the time. So I think 2025 is actually a really good year for non-US equities, and certainly for stories that offer a lot of potential upside.
I love it. Thank you, Jason. Thank you both.